Hi, everyone. Welcome to Market Insight for the week of June 24th through the 28th. Excuse me. Hope everyone's having a good weekend. We'll start with our monthly chart, the top-down approach that we usually take. And we can see that we continue to see the robustness of this rally off of the monthly chart. Price drives up this past week to new all-time highs of 55.88. I think it might have even been 55.88 and a half. And normally we would have seen a reaction on the monthly given the fact that we are so overbought in the trend channel, in the uptrend channel here. Excuse me. So this is a good example of why we don't just assume resistance, even higher time frame resistance like the monthly resistance. We don't just assume that it's going to hold. We always wait for the lower time frame charts to tell us that the higher time frame resistance is going to hold or not going to hold. So let's take a look at the lower time frames, starting with the weekly chart. And excuse me, the weekly shows strength over the last couple 2 to 3 weeks here. We broke out and above the 533, 53.33 resistance. That was the high that was put in back in mid to late March and early April, last few months ago. And price was strong, closing firm, closing up on its highs. And on the break, we see some nice increase in volume, right? So price movement is consistent with the volume. This is not excessive volume here. It's not climactic action or anything like that. But last week we see a little change, right? While the spread or the range is pretty much the same as the prior 2 or 3 weeks, we can see that the close is now off of the highs and the volume has receded quite a bit. So this is a potential early sign indicating or warning us that the market is vulnerable to a pullback, that the weekly market is vulnerable to a pullback. Excuse me. Sorry, I'm coughing so much. Now, we're still bullish. There's no significant supply that I see here, but we may just see a normal pullback in the coming days and weeks. So let's turn to the daily. It's the daily that's showing the vulnerability, right? A little bit on the weekly, but really on the daily. The first thing that we notice is that we're high in the uptrend channel. Actually, there's two here. We have a pretty mature trend that started back last April, bottom of April here, moving up. So we're in this now for a couple of months, so pretty mature here. And we're overbought up in that trend channel. And also in the more immediate trend channel from the lows of late last month, early this month, we're overbought in this trend channel too. So we're overbought in both. And the combination of the two occurring near one another as it's doing here is what we call confluence, meaning that together these are stronger than either one alone. So should be pretty good resistance up here. And we see on Monday of this week, back here, Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, Monday of this week, the market tested the breakout highs here. And that test was successful, and it was done on good volume, good solid volume, and a nice firm close. Right, so that's a nice successful test, and that allows for the rally on Tuesday. Right, again, good volume coming in, closing firm. Wednesday was the Juneteenth holiday with the American markets closed, so not a lot we can say about that. Just kind of fold that into Tuesday's trading. And then Thursday, we continue the rally in the trend into trend line resistance, into that confluence up there. And the market responds, right? We get a higher volume coming in here, producing a close that's below mid-range, below the middle of the bar. So, and that's the first time we see that in a couple of weeks since back here, right? Here we're holding support. Here it looks like we're holding resistance, okay? So for the first time since we broke out, we're seeing some negativity that came in on Thursday. And then the next day, Friday, was a narrow range day, also closing down, right? So it's a down bar, a little less volume than the prior day. And price on Friday does basically hold Thursday's lows, and that's a positive. But the market wasn't able to mount much of a rally. So that's kind of a negative. So not surprisingly, we're starting to see range consolidation after range expansion, right? We get range expansion up, and now it's not a surprise to see consolidation. I'll draw that in. Excuse me. So we get range expansion to the upside, and then not surprisingly to see consolidation, right? We see that here with range expansion up and then consolidation, expansion, consolidation. This is the normal way, expansion, consolidation. This is the way the market moves. This is the normal behavioral characteristic, the overall behavioral characteristic of the market and its movement. So we're not surprisingly, we're seeing that consolidation after expansion has taken place. And so we'll circle back to the daily in a few moments to see what's on tap for the coming week. But first, let's take a look at the point and figure chart. I want to look at that, actually a couple of those, and then the major markets as well. So let's turn to those first. So here's the 50 by 1 point and figure chart, the nice intermediate time frame, if you will, point and figure time frame. Works really well for swing trading and for keeping us on the right side of the market as the market is moving along. So you can see that on this point and figure chart, we've had objectives here, a couple of objectives up to 55.50. That was the larger objective here, and then a confirming count, stepping stone confirming count. And so on Thursday, we met this objective. So we've met the point and figure chart objective, and that's pretty cool, right? Now, that doesn't mean that the market is now about to immediately head south. No, point and figure count objectives are places that Bob Evans used to say, we want to stop, look, and listen, not necessarily act. So what that means is consulting the vertical line charts and the overall market and seeing what's there. So, but before we do that, let's turn to the slightly higher time frame point and figure chart. This is the 100 by 1 point and figure chart. Gives us a little bit, consolidates the data just a little bit more, and gives us maybe a little, I don't know if it's a cleaner picture, but a little less busy picture, if you will, and maybe a little cleaner picture. I like the 100 by 1 chart here. Excuse me. And so we can see here on the 100 by 1, a very nice consolidation structure here. And that gives us still have a little cause left up to 5,900. In fact, there's another count along this line that would give us even a bigger cause, but let's be conservative and stick with one step at a time here. So we still have a little bit of cause left that would take us up to 5,900. Now, if this were to occur, most likely we would see, go back to the 50 point and figure chart, we'd see some consolidation here on the 50 by 1, and that might give us enough cause, right, a confirming count to push us up to the 5,900 objective. We'll have to see. I mean, that's just conjecture at this point. The point here is that there's no evidence of supply significant change in the trend at this point. So the takeaway on the point and figure chart is we've met the objective. We're vulnerable to a pullback. We're likely to see that pullback. There's no distribution or supply evident on the figure or on any of the charts. And so that pullback is likely to just be a normal pullback and not the change of direction in the trend, even though we've met objective on the point and figure chart. Okay, let's take a look at the major markets here. And we talked about this last week, that the S&Ps and the NASDAQ are the two stronger markets, with the Dow being the weaker. Nevertheless, all three markets remain in a bullish phase. I don't see distribution or negativity on any of the markets here, though the Dow is objectively still the weakest. So we're assuming now a pullback. Here's a way to use the Dow futures. We're now assuming a pullback in the S&Ps and presumably in the NASDAQ as well. And there's obvious support for the Dow here, right, on any pullback. So if the Dow breaks this support, then it's an early sort of indication that there's likely to be a bigger reaction than what we're anticipating maybe on the daily chart in the S&Ps. Okay, so that's a way to use that now. Watch the Dow. If it breaks this level here, just above 39, looks like 39,250, somewhere's in there. If it starts trending, trading down below that, we're in for a bigger reaction on the S&Ps and on the NASDAQ. Let's go back to the daily chart of the S&Ps and see what's on tap for the coming week. So Friday's low is critical here. We could see the market base right in here for a day or so between 55.19, Friday's low, and say about, 55.60, 65 up here, the top of the larger daily supply line. So we could see the market base in here for a day or two and then push up, working to test 55.88, probably get up to 5600, but basically test the top of the supply line up there. So that's one scenario. Holding Friday's low of 55.19, 55.20, maybe basing for a day or two, in other words, consolidating more for a day or two, just trading back and forth between the low of Friday, 55.19, and around 55, say 65, the resistance formed by the supply line. And if we continue to hold there, we likely will see another attempt up to at least retest 55.88, maybe even go a little higher up to 5600. But still, we're overbought up in here, and I would still anticipate some more downside. So that's kind of the more bullish scenario. Now, if 55.19 breaks, then the first level would be back down to 5500. That's the highs up here, maybe 54.95. 54.95. So that's those highs. Of these highs right here. And that, again, we've got confluence here. It's still operating between the demand line and the horizontal support line. So that should be pretty good support. And that's where the Dow, we watch the Dow there and see if the Dow is holding that its level, acting as the canary in the coal mine, so to speak. If that breaks, then obviously we're in for a bigger reaction down, and most likely we would be coming back down towards the 5400 level, maybe a little bit lower, but that would take several days to come down to, probably more than just a week. So look initially for 5520, 5519 to hold, maybe bounce around back and forth between 55.19 and 55.65, then trying for a shot at 5600. If 55.19 isn't able to hold, then 5500 to 54.95 should be pretty good support. If for some reason that, because we're vulnerable on the weekly and the day and the monthly for a larger pullback, so I'm thinking in those terms too. If we start to get the higher time frame pullback, then we're likely to head back down towards 5,400, maybe lower. And we would first see 5,400, 5,500, 5,495 breaking, and that Dow would be breaking its supports as well. So that's what I see for this week. And for membership, we have meditation classes twice this week, 2 separate classes. They're one on Tuesday and one on Friday. You know which one you're in. Helen's met with both of you now. Some good classes and some fun discussion that we've had in there. So we'll do that on Tuesday the 24th for the first class at 7. And then for the one that started a little bit later, the second class will meet for its second class on the 28th at 4. And then we'll do deep practice on Thursday, our normal time on the 27th at 8 o'clock. So enjoy the rest of the weekend. Have a great trading week next week. And we'll see you for meditation and for deep practice next week. Everyone, take care. Bye-bye now.